Hi, my name is Jerry Yu, the Family Money Doctor. Thank you for joining us. I have been a retirement specialist in tax strategies for over 20 years, and I have helped many clients to move their retirement funds based on their needs and current financial situation. And today I'll be sharing the different method of moving qualified retirement funds. Almost all of us have some type of qualified retirement plan, such as IRA and 401ks. Today's topic is the type of transactions available to move money from IRAs. In preparing for your retirement, you may have used an IRA to accumulate retirement savings. But at some point, you may wonder whether you should maintain your IRAs as it currently is. Whether you change jobs, quit, got laid off, retire, or simply want alternative choices for your retirement saving, you may consider moving your IRA to a different IRA, or maybe to a new employer's qualified plan, or to an annuity, or somewhere else entirely. But how and where you move those assets makes a big difference. While the possibility may appear to be simple, but there are rules that can make your decision more complex. Now, understanding the rules may cause delay and possibly unexpected tax consequences. So before I go into detail, I really appreciate it if you can click the subscribe and like button so you will be notified when I release new videos. Now, here are some of the methods. Now, the transfer is when a same type of IRA is moved directly from one financial entity to another. An example, you will be moving your traditional IRA from one IRA provider to another traditional IRA at another IRA provider. This is the same for Roth IRA, Simple IRA, or SEP IRA. With the transfer to the IRA, the owner does not receive access to the funds. Transfers are not reported to the IRS, and they are not taxable when the entire amount is transferred because assets were never made payable or distributed to the taxpayer. There's no income tax withholding and no limits on the number of transfers you can make. Now, rollover. They're a bit more flexible. You can move retirement funds from one financial institution to another using rollover. Or you could also move retirement funds from the financial institution to you, the owner, and then again to another financial institution. Now, it depends on who is involved in that movement and that movement of funds. A rollover can either be a direct rollover or it can be an indirect rollover. A direct rollover is when funds are generally moving from different plan types. So moving your asset from an IRA directly into an employer-sponsored plan such as 401k, 403b, or a governmental 457b plan would be called a direct rollover. A direct rollover is different from a transfer because it does not involve moving funds between two IRAs, but like a transfer with a direct rollover, the funds were never made payable to you or distributed to the taxpayer. An indirect rollover is when funds moving from financial institution to the IRA owner and move it to another financial institution. An indirect rollover is different from the direct rollover because when the funds move or transfer from the financial institution, the IRA owner has access to the fund before they move it to another financial institution. So if you choose to take a distribution from your IRA using this method, you can have access to the funds up to 60 days before you deposit the funds to a new qualified plan or a new IRA. Now, if the indirect rollover is completed within 60 days and all rollover requirements are met, the IRA distribution will not be subject to income tax. Withholding is required if the IRA owner does not specifically elect no withholding. If there's a withholding, the withheld amount is subject to income tax unless the IRA owners rolls over the withheld amount using other funds. So it's also extremely important to be aware that while IRA to IRA transfer are almost always permissible, certain type of distribution are not eligible to be rolled over. So for example, required minimum distribution or RMD are not eligible to be rolled over. Now, understanding the differences among transfers, direct rollovers, and indirect rollovers is essential to minimizing the potential for errors and unintended consequences. So as always, if you have any questions, speak to your financial advisor today to address any consideration regarding your IRA money. So thank you for watching, and I will see you again next time.